warahmatullahi wabarakatuh to Dr. Azlina and all our friends. Today, we are from FIN658 would like to present about their problem-based case study. We choose Ablegroup Berhad. Before I start my part, let me introduce my group member first. First is company background. Ablegroup Berhad was established on 1st January 1998. A holding company for a group of businesses in the building materials industry. Ablegroup Berhad process, trades, export and manufacture high quality marbles and granite goods. Under Ablegroup Berhad, they have two subsidiaries which are Shanghai Jifeng Marble Granites and Bukit Granites Company. Then, I will proceed with the nature of the business. Building materials, investment holding, and property development are company's three operating segments. The building material division accounts for the majority of company revenue. The majority of Ablegroup Berhad is granite and marble. Property development generates income for the side business, which focus on building luxury homes. The company more heavily emphasized and derive its income from granite and marble, which is processed for delivery and installation to the Malaysian markets. They also expand their business to Japan, China, Korea, and Singapore. So this is the organizational chart of Ablegroup Berhad. Last of my part is company core value. This company have four core value, which are value, integrity, discipline, and trust. First is value. Employees and the board of directors needs to add value to the business. The company will be strengthened even more by having this value, which forbid any one person or small group from controlling the board's decisions. Second, integrity. A person of integrity who upholds a strong moral and ethical standard and act honorable while employed by the company. Third is discipline. This is a strategic focus statement that gives the business a framework within which to determine its corporate vision and objective, focus on its most lucrative clients and coordinates its operations. Last is trust. With the trust already established, our company now seek to win the confidence and trust of our shareholder and investor. So that's all my part. I will pass to the next presenter.
This is a statement of comprehensive income of Ablegroup Berhad. As you can see, they are having loss from 2018 until 2021 except for 2017. Next, this is their statement of financial position from 2017 to 2021. Their non-current asset increased from 2017 to 2021. Meanwhile, their current assets are decreasing. Next, the total equity and total liabilities of this company is decreasing. Let's move on to financial ratio analysis. First is liquidity ratio. For the current ratio are decreasing from 2017 to 2021, which are from 15.63 times to 4.62 times. Next, for the quick ratio also decreasing from 2.87 times to 2.6 times in 2017 until 2021. For the net working capital, again decreased from 2017 until 2021. The company's total assets are decreasing from 2017 to 2021. The company's inventory turnover is not in good shape, as it was less than 1 in 2017 and 2018, increased to more than 1 in 2019 to 2021. Following that, Ablegroup Berhad displays a good result in account receivable turnover. From 2017 to 2021, the company's account receivables turnover increased from 2.95 times to 3.04 times. This means that the company was able to collect money account receivables. Furthermore, from 2017 to 2021, the company's asset turnover decreased. For the past 5 years, the total asset turnover for this company has been less than 0.5 times, indicating that the company is less efficient and unable to generate sales from assets. That's all from me. I will pass this presentation to the next presenter, Nurul Syuhada.
The percentage of total assets that are financed by indebtedness is determined by the debt ratio. In the company's financial statements, DR denotes the amount of debt for capital structure. As we can see, Ablegroup Berhad is in a good condition due to decreased DR from 2017 to 2021. If the higher, the company risk absorbed. It is a gauge of how much debt, as opposed to fully owned funds, a company is using to fund its activities. More specifically, it shows whether shareholder equity would be enough to pay off all debts in the event of the downturn in business. As we can see, the risk of DER for Ablegroup Berhad from 2017 become decreased until 2021. Can be concluded that the lower the DER, the better for Ablegroup Berhad. Next, I will explain about profitability ratio. Firstly is net profit margin. The net profit margin is used to calculate the net profit from sales after deducting administrative, interest and tax costs. As we can see, net profit margin in 2017 is positive, which is 0.03%. Then in 2018 until 2021, the NPM is negative, which means the Ablegroup Berhad spending more money than they are making, which is not a sustainable business model. The higher the NPM, the better or more effective for generating net profit. Second is return on asset. The ability and efficiency of a corporation to generate profit is measured by return on assets. As we can see, ROA in 2017 is positive, which is 0.006%. Then in 2018 until 2021, the ROA is negative, which means the Ablegroup Berhad might be in jeopardy is if in overinvested in assets that haven't increased revenue. The higher the ROA, the better or more effective for generating net profit. That is return on equity. Return on equity is used to assess a company's capacity and efficiency in using the total equity to produce net profits. Additionally, ROE gauges a company's capacity to produce net profit for its shareholders. As we can see, ROE in 2017 is positive, which is 0.006%. Then in 2018 until 2021, ROE is negative. When costs are incurred as a result of expanding the business, such as through restructuring, a negative ROE is not always a bad thing. Next, I will explain about comparative analysis. For comparative analysis of the statement comprehensive income, cost of sales of Ablegroup Berhad was decreased in 2021 by 32.60% compared to 2019, which is 61.56%. As we can see that the gross profit of Ablegroup Berhad decreased in 2018 to 36.81% and become increased in 2019 to 57.94%. But their gross profit become decreased again in 2020 to 56.22% and will remain at 46.27% in 2021. According to the table of financial statement above, Ablegroup Berhad still survive even though their financial statement is not doing well compared to the previous year from 2017 to 2021 based on the comparison table above. Non-current asset of Ablegroup Berhad has become decreased by 2,528.64% compared to 2019, which is 2,565.63%. Their current asset also become decreased by 13.74% in 2021 compared to 2028, which is 97.27%. Meanwhile, total asset did not make any improvement because their total asset also decreases by 90.63% compared to 2018, which is 97.06%. As the result, Ablegroup Berhad is decreasing in assets, which means the company's cash balance fluctuates based on operational cash inflows and outflows, as well as financing operation. Next, in terms of equities, Ablegroup Berhad shows decreases every year from 2017 to 2021, which is 100%, 97.85%, 96.36%, 95.07%, and 93.57%. As a result, Ablegroup Berhad's liability exceeds its assets. By gaining more investments in the firm or boosting profitability, the corporation might enhance low or negative equity. Lastly, in terms of total liabilities, Ablegroup Berhad also show decreases every year from 2017 to 2021, which is 100%, 85.14%, 75.21%, 67.19%, and 46.39%. As a result, Ablegroup Berhad's total liabilities are relatively modest. Lenders may offer it more favorable interest rates on any new debt company incurs because a lower sum of liability reduces the risk of default.
Next, we move to the common size analysis of Ablegroup Berhad. Common size analysis was using to looking more depth on the financial account and each financial items using percent as to set the quantity for the short of time. According to the table, the common size analysis of Ablegroup Berhad was calculated from 2017 until 2021. Based on the common size analysis of the statement on comprehensive income, the cost of sale increased to 71.06% on 2021 compared to the year 2020 with the 68.06%. As a result, their gross profit decreased about 22.37% on 2017 and also decreased in 2018 and started to increase on 2019 until 2021 with the 28.94% on 2021. On 2017, Ablegroup Berhad operating profit was 1.13% with the finance cost loss about 1.0%. On 2018, they suffered from a loss from operating with 23.06%, decreased to 12.39% on 2019. Unfortunately, on 2020, the operating loss increased to 19.38% and keep increasing on 2021 with 33.91%. So, looking on the common size analysis of Ablegroup Berhad on their financial statement of financial position, the property, plant and equipment in 2017 show on 1.74% and dropped to 1.53% on 2018. Unfortunately, it showed a decrease for 2019 until 2021. Next, for the current assets, Ablegroup Berhad shows that their inventories were 79.13% on 2017 and increased to 82.37%. However, it started to decrease for 2019 on 6.03% and 6.42% on 2020 and increased 1% on 2021 by 6.43%. It indicates that Ablegroup Berhad has sold more than purchased on goods. Additional cash had to be used in additional inventory had to be purchased, which indicates that there was a cash outflow. For their trades and other receivable, it was dropping on year 2017 at 6.13% to 2.40% on 2021. It means that Ablegroup Berhad was able to collect their debt from the customers and use that to roll the business operation. Next, Ablegroup Berhad on share capital was increased year by year. On 2017, it showed that the percent was 81% and increased about 1.37% on 2018 with the 82.37%. It kept going increase till year 2021 with 89.39%. This indicates that the share capitals of Ablegroup Berhad could be detrimental to current owners because they typically cause the share dilution. As a result, each current share now only reflects a smaller portion of ownership, decreasing the share's value. Next, Ablegroup Berhad of non-current liabilities shows that their loans and borrowing was decreasing from 8.19% on 2017 to 0.50% on 2020. Besides, their current liabilities on trade and other payables also show decrease from 5.03% at 2017 into 2.67% on 2021. This means that Ablegroup Berhad was paying their debt on the pure period at the faster rate.
Next, I will explain about the comparison year by year of ratio analysis. For ratio analysis, Ablegroup Berhad's liquidity ratio performance is declining. From 2017 to 2021, the calculated net working capital is positive, but according to the current ratio, net working capital has been decreasing from 2017 to 2021 as the company is barely scraping by and has only enough capital to cover its short-term expenses. This means that the company unable to meet its current debt obligations unless it raises external capital. Ablegroup Berhad's activity ratio is performing poorly overall. The company's asset turnover decreased from 2017 to 2020. This company's total asset turnover has been less than 0.5 over the last 5 years, indicating that it is less efficient and unable to generate sales from assets. For leverage ratio, the debt to equity ratio in 2021 is 3.28% higher than the previous year, while the debt to equity ratio in 2017 is the highest at 6.62%. However, the debt to equity ratio has been greater than 1 in each of the last 5 years. This demonstrates that the company is riskier and more unable to meet its financial obligations. The lower the leverage ratio, the easier it is for the company to obtain a loan. For profitability ratio, the return on equity in 2021 is negative 2.57%, down from 0.0006% in 2017. This demonstrates that the company was unable to keep its costs under control during those years. Changes in the economic situation of the COVID-19 pandemic may cause a drastic drop in 2020. Overall, the company's lower ratio indicates that the company is not performing well and is unable to generate revenues, profits, and cash flow. In our opinion, Ablegroup Berhad should improve their liquidity ratio because it is one of the most important ways to ensure that their company is in good financial health and less likely to face financial difficulties. To begin, they can open sweep accounts with their financial institution. This will allow them to earn interest on any excess cash balance by sweeping or transferring the funds into an interest-bearing account when they are not needed and returning them to their operating account when they are. Another recommendation is to assess their overhead costs and see if there are any opportunities to reduce them. Cutting costs has a direct impact on profitability. Overhead expenses such as rent, advertising, indirect labor, and professional fees are indirect expenses incurred by a business in addition to direct material and direct labor. In conclusion, Ablegroup Berhad is a Malaysian holding company for a group of building material companies. The overall result of this study is that Ablegroup Berhad is a beneficial influence in the building material industry based on ratio analysis, comparative analysis, and common size analysis. Based on the findings of the investigation from 2017 to 2021, we can conclude that Ablegroup Berhad has a good performance. That's all from us. Thank you.